Get into the market outlook.
Let's do it.
So, we had this huge run up, and like we were saying, we were expecting more of a range bound market. I thought we would get more of a run up off this pivot Friday. So we had this run up, and we came in, and then last Friday we began to pivot, and it looks like the market wants to head lower from here. So we have the Fed minutes tomorrow, and the move that prompted today's sell-off, it was kind of a bull trap, was one of the Fed's presidents came out and said, we might have to be more aggressive with raising rates. So the market didn't like that, even though it's pretty known at this point, which was kind of surprising to me. But we'll get more information in those Fed minutes tomorrow. But that's what prompted the sell-off today. So it looks like stocks are heading back lower. And again, we're in this range-bound market. I have the S&P up, the SPY, the futures, and it looks like, somewhere between 420 and 460 is going to be this new range. So, that's kind of what we're dealing with. And we're going to have to go back into, the style of buy the ugly and sell the pretty. So I got kind of trapped this week. I was buying a little pretty, and I got punished for it. And it just kind of reinforced the thought, we're in this very volatile market. When things are looking good, that's probably when you want to be taking profit. When things are looking horrendous and scary, that's probably when you want to be buying. That's pretty much it on my end. What are you thinking over there?
So just going over a couple quick sectors. We have utility sectors is still very strong, and that's probably more of a bigger clue, like what you mentioned, that we're going to stay in this more range-bound market. When you see the utility sector breaking out to new all-time highs, it looks almost like the tech sector a year ago. That's a pretty big red flag that it's still kind of risk off that we're in this range-bound, because if utilities are breaking out, that's kind of like a flight to safety that you can assume. So seeing that breakout, seeing that even we were trading some utility names last week and they were actually breaking out, that's kind of like a little bit of a clue to kind of take the foot off the gas pedal. We saw a few other pretty strong sectors. Consumer staples, again, a pretty more defensive, safer sector, very close to retesting its prior high, pretty strong. The material sector, pretty much perfectly retested its prior all-time high, so it looks pretty good. And this is like the opposite side of, I have my chart turned on, Chase. I know you can't see it, but where you can see the little circle drawn, this is like the material sector is breaking out of that little range that it was in, where for the S&P, you can imagine like this green line is like the 460 area, that it's still acting as resistance. And eventually, when the SPY can get above this area, we can expect to move back to highs, which is what we saw in the material sectors. We're just not seeing that in the broad market. So that's just kind of like a clue of what we could expect in time when we can break up through 460. And then lastly, another one of the last other strongest sector, we have obviously energy. But like you mentioned earlier today with like Oxy, it looked amazing, but it could potentially start to break down. Same thing here, very clear uptrend in the energy sector as we start to flag out near these highs. But given how much it's gone in the last few months, breaking this downtrend could be much more likely, for a shakeout than break up through highs and it continues. We have the tech and consumer discretionary sectors trading very similar. I would call them like brother and sister in this perfect range, trading very similar to how the SPY is trading. Again, kind of that risk off. We want to be taking profits into resistance until we see that strong break. So for like VGT, it's that strong break up through 430 in time after it kind of pulls in. Same with VCR. Right now the 200-day continues to act as resistance. That's like 320 in VCR. And when it can let it pull in, let it set back up, and eventually back up through that 320 is when we want to be more aggressive and more involved. And then two of the weaker sectors, we have telecom, which is very clearly still in this broad downtrend, and the biotech sector, same thing, still in this kind of stage 3 breakdown that's just still kind of in a void. So that's just kind of looking under the hood a little bit closer.